Please confirm me on the chat box if I'm audible and visible clearly. Okay, I think there was some sound error. Yes. Yes, now I must be audible and visible clearly. Thank you. Thank you so much. Thank you so much. Thank you so much. So let's quickly start with our session. So very good evening everybody, hope you all are doing really well. I welcome you all to this lecture number 1 out of our total 10 lectures where we are going to revise AA in entire sense, that is we are going to cover AA revisions as well as question solving sessions as well as some of the important questions that I will be giving you, and you can write your answers and send it to me for the evaluation part also, all in YouTube only. My dear friends, today is lecture number 1 and we are going to conduct 10 such sessions where we are going to cover everything in detail. We are going to use the notes which are handwritten by me, and we are going to use the question banks which is comprised of ACCA study of questions and various reference materials questions as well as a lot of concept based questions as well. So my dear friends, I welcome you all to this session and just sit tight with this session, okay? Once you spend these 10 sessions and once you complete these 10 sessions, I am sure that you will be prepared for your double examinations, okay? So before starting with the session, I would really request you to attend this session in full. Subscribe to our YouTube channel, like this video as well as subscribe to our Telegram channel for all communications, okay? So quickly go to our syllabus first. So my dear friends, you can see that in your AA syllabus there are these 31 chapters, right? There are these 31 chapters. These are my notes only that I have created, and we are going to use these notes for the purpose of completion. Now today what we are going to do is, today we are going to complete chapter number 1, then we are going to go for chapter number 2, and then we are going to go for chapter number 3. That is how we are going to move forward. Whatever queries you have, what you can do is you can keep writing on the chat box. Once we complete one portion of the syllabus, that is one chapter, we are going to take up your queries as well. What I am going to do is I am going to keep the pace a little faster so that we can complete on time, but just in case if you have any queries, please feel free to write on the chat box. I would be happy to answer it for you. Now my dear friends, our today's agenda is to complete 3 chapters, that is chapter number 1 audit and other assurance engagement, chapter number 2 external audit, and chapter number 3 which is corporate governance. Generally we will be taking a 2 to 3 minutes of break, maximum 5 minutes of break after completion of each chapter. I hope the pace is really clear. So let's quickly go to chapter number 1, which is the concept of audit and other assurance engagements. My dear friends, this chapter is starting from page number 1 and going up to page number 8. So it's a small chapter only. Now when I talk about the concept of audit and other assurance engagements, first thing that you need to understand here is, first thing that you need to note down and understand here is the objectives of an auditor, where we talk about objectives of an auditor. So my dear friends, generally there are 3 objectives of an auditor. What is that? To obtain reasonable assurance, to express an opinion, and to report on the financial statements. But my dear friends, if you write just these 3 points, is your answer going to be completed? No. So what you have to write? To obtain reasonable assurance about whether the financial statements, we are going to call it FS afterwards, as a whole are free from material misstatement, whether due to fraud or error. That is the first pointer out of the 3 pointers. Then second point is to express an opinion. Express an opinion on what? On whether the financial statements are prepared in all material respects in accordance with an applicable financial reporting framework, which we are going to call AFRF later on. Then to report on the financial statements and communicate as required by the ISS in accordance with the auditor's findings. So generally we are going to mention 3 pointers here: to obtain reasonable assurance, to express an opinion, and to report on the financial statements. These are the 3 key pointers that you need to remember. Do you need to remember this? Yes, of course you need to remember this in full, okay? My dear friends, since these are revision sessions, what we are going to do is we are going to try that we write as little as possible, as lesser as possible, okay? Now nature and development. When I talk about the nature and development part, not very important for your examination, but traditionally the focus was only on fraud detection, but now the focus has shifted to providing independent assurance on whether financial statements are prepared in true and fair view. Already we have covered what is true and fair view, but again we will be covering it at the relevant space when we talk about the auditor's report. Then expanded roles are into corporate governance, risk management, and non-financial reporting as well. Thereby you see that there is ISA 720 also, which is other information. Now when I talk about concepts, so there are 3 concepts which are very important and are frequently asked in the examination as well: the concept of accountability, the concept of stewardship, and the concept of agency. What is concept of accountability? Where the party is held responsible, that is answerable to another party. That is, if I say that I am accountable to you, it means that I am answerable to you. Okay, it will be required to justify its actions and decisions to that party. What you have to remember, held responsible or answerable to other party. When one party is held answerable or responsible to another party, it is called as that party is said to be an accountable party. Stewardship is the practice of managing other person's property. Practice of managing other person's property. Where does it happen? It happens in a company also. When we talk about company, so directors of a company are performing stewardship only, that is they are taking care of assets which are owned by somebody else. Then when we talk about agency as a concept, so an agent is an individual employed or used to provide a particular service on behalf of other person. That is, if I hired one particular person to act on my behalf, say for the purpose of counseling, and I am responsible for their activities, they are said to have entered into a contract of agency with me. Generally, if you have covered the law syllabus also, you might be aware that partners are by default considered as principals as well as agents of each other. So that is very important. Agent is an individual employed or used to employ for a particular service to be done on behalf of another person. Now assurance engagements. When I talk about assurance engagement, here there are very important definitions that are mentioned over here, and what you need to understand is that there are certain elements of the assurance engagements also that we need to take care of. When I talk about the definition part, so what you need to understand, a practitioner, not the auditor, practitioner expresses what? Expresses a conclusion. Okay, that is the second word that you need to mention. Designed to enhance the degree of confidence. That is very important. The purpose is enhance the degree of confidence of the what? Intended users. These are the keywords that you need to mention. Intended users other than the responsible party, that is other than the main company, other than the responsible party. But sir, you are mentioning every point as the important point. My dear friends, what can I do? In your syllabus there are few definitions that you need to remember by heart, word by word, because you might not be able to write it in your own words appropriately. So this is one of that condition. About the outcome of the evaluation, about what? About outcome of the evaluation or measurement of a subject matter against some criteria. So these are the 8 pointers that you need to mention. However, when you go for the essential elements of the assurance engagement, you will find little lesser than that, but around these points only you will find your 5 points. Now, typical assurance services include what? Audits of financial statements, reviews of historical financial information. All of this we are going to cover as we move forward with our syllabus. Prospective financial information, again covered as part of syllabus. Risk assessment, again covered as part of ISA 300. Value for money audits, and system and control reliability, that is covered as part of the internal control discussions. Now when I talk about elements of an assurance engagement, so there are multiple elements that are covered over here. Number one being the subject matter. Subject matter is really important, right? Then three-party relationship should be there, that is between responsible party, external auditor, and intended users. Then criteria should be defined clearly, against which criteria the subject matter would be evaluated. Then evidences needs to be obtained, appropriate evidences needs to be obtained, which helps the auditor or the practitioner to form a conclusion and an opinion in the assurance report. These are the elements of an assurance engagement. What are these elements? Is this important? Very important. Very important. I would suggest 5 stars for this. Okay, so what you need to remember, subject matter should be there, three-party relationship should be there, criteria should be there to evaluate the subject matter, and then the practitioner needs to obtain the sufficient evidences for the purpose of concluding on the evidences and then framing an opinion in the assurance report. Do we need to remember this by heart? Yes, of course. Now let's talk about types of assurance engagement. So my dear friends, there are generally 2 types of assurance engagement. One is reasonable assurance engagement, another one is limited assurance engagement. Let's first discuss about this word assurance. Assurance means what? Assurance means that we are obtaining certain evidences, and based on that we are evaluating that by which confidence we can say that this is appropriately disclosed and measured. Now my dear friends, what is important here is when we talk about reasonable and when we talk about limited, let's first discuss about it. For example, if 100% items are there, okay, out of that auditor has tested maybe say 20% of the items, but auditor would be projecting their opinion on the entire population. And if auditor is able to say that, we can say with 95% assurance that whatever report we have issued, that is appropriately issued, that is appropriate for the overall population, that is 100% of the items. Now this 95% is a very high level of assurance, but they cannot issue absolute assurance. They cannot say with 100% surety, but they can say with say 90%, 95% surety. So if they would have said with 100% surety, that would have been called as what? That would have been called as absolute assurance. Is it possible? Is it possible? In an assurance engagement, it is not possible because we check on the test items. But if I talk about 95%, it is possible? Yes, and that would be called as reasonable assurance. That would be called as what? Reasonable assurance. However, if there is little lesser than 90%, then it is called as Limited assurance. If 100% absolute assurance, if 90 or above, it's reasonable assurance, and below 90, it's limited assurance. So now, generally these are the percentages that are used. Now, reasonable assurance engagements, limited assurance engagements. Reasonable assurance engagements are generally the audit engagements, and limited assurance engagements are generally the review engagements. When I talk about reasonable assurance engagement, what we need to understand here is that it provides a high level of assurance by expressing a conclusion in positive form. Positive form as in they consider everything. Okay, practitioner should obtain sufficient and appropriate audit evidences. That is, we have to obtain all types of evidences. We have to apply all types of procedures, ACCA AAA, that we are going to discuss later on when we go to the audit procedures. And assurance engagements risk should be reduced to an acceptably low level, that is generally up to 10%. Generally up to 10%. Okay, more on this when we will discuss about AR, IR, CR, DR under ISA 300 series. Now, limited assurance engagements. When I talk about the reviews, so it provides a limited or lower level of assurance, generally 90% or below, by expressing a conclusion in negative format. That is, nothing has come to our attention. Whereas in positive format, we say that we have verified everything and we have concluded. But in negative form, we say nothing has come to our attention, which makes us believe that there is something wrong. Evidence is obtained through inquiry or analytical review. That is only through ICAI ORR, but they only perform inquiry, no confirmation, no inspection, no observation, no recalculation, no reperformance. Then assurance engagement risk is more significant but still acceptable. If it would have been not acceptable, then you should either let go of the engagement, you should withdraw the engagement, or take legal advice in that matter. Now, level of assurance provided by external audit and other review engagements. It's just like the opposite version of what we have discussed. Here we have discussed what is reasonable assurance, what is limited assurance, and then we took the examples of audit and limited reviews. Whereas when we talk about level of assurance, so here we have divided it into two parts, which is external audit and other review engagements, and that's how we are going to study it. So external audit, it usually provides reasonable assurance, positive opinion is there, that is, in our opinion, the financial statements present fairly. True and fair view is generally issued over here. But when we talk about other review engagements, like we have discussed, we issue in negative format. So limited assurance is there, negative opinion is there, and the word that is used is nothing has come to our attention that causes us to believe. Now, when we talk about other assurance engagement, it can be reasonable or high as well. But when I talk about agreed upon procedures, what are these agreed upon procedures? For example, this could be used for corporate governance reporting. Now, what happens in corporate governance reporting? Auditor or the practitioner just agrees with the management that they will be performing some agreed upon procedures that are agreed between the management and the auditor or the practitioner, and they will be issuing a report. For example, once I performed this agreed upon procedure report when I was working at Bahrain, and what we did is we just agreed some of the procedures with the management and then we performed it. For example, whether the audit fees disclosed in the financial statement is as same as the engagement letter or not. So no assurance is provided here, only factual findings are provided over here. Just yes or no answers are there at a majority of the places. That is very, very important for us to understand. Now let's talk about true and fair view. What is true and fair view? Although we will be discussing about it when we go to the audit report section also, but what is true and fair view? So my dear friends, true and fair means something here. True means financial statements are free from material misstatement. What is material? Material as in which is significant, right? Which has the capability of impacting the economic decisions or uses of financial statements. And when I talk about misstatements, that is difference between what is accounted, what is reported, what is disclosed, and what should have been done. Presented accurately and reflect reality and compliance with the regulatory framework. That is, if something has complied with all the regulatory framework, all the accounting factors, and which something has been presented accurately, then we can say that it has been presented in the true manner. But when I talk about the fair work, financial statements are presented neutrally and without bias. That is, whatever judgment should have been taken in a neutral sense, that judgments have been taken by the management. Nothing has been manipulated in such a way for the favorable interest of the company or the management. Economic substance is there more than the legal form. That is, it talks about substance over the form, which you study under FR and SBR also. Now, expectation gap. What is expectation gap? So my dear friends, whenever you must have heard of any of the frauds, generally people say that that fraud should have been identified by the auditor. But a lot of times when we go deep dive into it, then we understand that auditor was not at fault, because auditor has performed their procedures appropriately. Nothing came to the attention of the auditor that resulted into auditor thinking that there could be a fraud. So auditor has performed all the duties as per the relevant standards. Still, the fraud was very difficult to identify. Now, general public does not assume that. General public assumes that whatever fraud is there, a lot of times auditor should have been mistaken. But that is not true. So that is the expectation gap. That is what the users of financial statement believe auditors are responsible for, and what auditors actually responsibilities are. Areas of expectation gap could be fraud and error. Whenever there's a fraud and error, there could be expectation gap. And role of management and auditor. For example, when I started working as an auditor, a lot of my friends, a lot of people who used to work around me, not in the audit industry, they used to think that we prepare the financial statements, but that is not true. Management prepares the financial statement, we just audit it. So with this, we have completed chapter number 1. Now if you have any queries, please feel free to ask me. I can read your chats now. Yes, any queries, please feel free to ask me. I can see a lot of you are live here. Any queries? Any queries? Yes, any queries, please feel free to let me know. Any queries on any of these topic? Yes. So what is the saving PDF feature? So my dear friends, whatever I write, I try to save everything, because what happens is after a point in time, we might forget that what we have written, or you might miss out on it. So that is why I write it also, and I save it periodically also. Yes, this was a quite simple chapter, quite direct chapter. Any other queries that you have, please let me know in the chat box. Yes, any queries? Or else we can go to chapter number 2, which is external audits. Okay. Perfect. I hope this is clear, right? Because we might not be able to revise it later on. So if you have any questions, please feel free to let me know. I am keeping my pace a little faster so that everybody could understand it in minimal timings. Yes, perfect. Okay, perfect. See, we are not developing our understanding from zero. I am assuming that you must have read it at least once, so that when you understand this, when you attend this particular session, you are able to recall everything, you are able to understand everything. Just in case if you are not able to recall anything, you will be understanding it, don't worry. But it is not for those students who have not at all studied AA any time, and now they are studying for the first time, so it would be a little difficult for them to grasp it. Okay, now let's talk about chapter number 2. Chapter number 2, which is external audits. Chapter number 2, which are external audits. Let's discuss about it. Okay, regulatory environment for audit. What is regulatory environment for audit? So it is predominantly statutory, that is, it is given by laws and regulations. However, some jurisdictions allow for audit exemptions also. For example, there could be an exemption on small companies. In India also, there are a lot of exemptions that are provided to for audit to various companies. There are many other jurisdictions where you will find that a lot of companies are exempted from the point of audit. Now, mechanisms. So auditors needs to be regulated to ensure that they maintain high standards of audit work and their reputation with the public is maintained. That is the reason why there is a lot of regulations. Auditors are regulated by what? Statutes, say laws and regulations, licensing requirements, who will be allowed to perform an audit, competence requirements, that is, they have to continuously update their knowledge skills through CPRs also. Then professional conduct also, there are a lot of rules and regulations. For example, in India, chartered accountants in practice cannot enter into any profit making business unless specifically approved by the council. Then auditing standards also, we have studied a lot of essays and they are continuously revised also. So for example, like I told you at the time of expectation gap, that if you comply all these standards, by default you will be complying with all the requirements of the professional standards also. Disciplinary procedures are also there, that is, every accountancy body has one disciplinary procedure as well as disciplinary department, that is, anybody who does not follow it, they will be liable for disciplinary actions also. Now, International Federation of Accountants, what is this IFAC? So IFAC is something under which there are multiple committees regarding creation of auditing as well as accounting standards as well as various educational standards also. What is the purpose? The mission is to serve public interest by doing what? By contributing to the development, adoption and implementation of high quality international standards and guidances. These international standards and guidances are both for accountancy as well as auditing also. Now, vision. What is vision? Global accountancy profession is recognized as a value leader in developing strong and sustainable organization. See, a lot of times we say that engineering is the mother of all sustainable organizations, but what IFAC feels is that accountancy should also be, because reporting is equally important. So IFAC feels that, or IFAC's vision is to set up this global accountancy profession as a backbone of developing strong and sustainable organizations. There are various standard setting bodies under IFAC. Some of these are covered in our syllabus also. First is IAASB, which is International Auditing and Assurance Standards Boards. As the name suggests, what it might be creating national standards for international standards for auditing, assurance and related areas. Then there is ISBA. ISBA. We hear it in ethics, right? So International Ethics Standard Board for Accountant. This sets robust ethical standards for professional accountants worldwide. Then there is IAESB. Now this is not directly important for our syllabus, but you should at least understand and remember the full form of it. International Accounting Education Standards Board. This develops a lot of procedures for the purpose of education, to develop guidance, conduct research and facilitate exchange of information across the globe. Then IPSB AB, again this is not very important for your examination, but International Public Sector Accounting Standards Board. What does this develop? This majorly looks for the accounting standards which are applicable for the public accounting, develop standards for use by governments and other public sector entities. Why is it important? Because here the stakeholders are the general public, the money that is involved is of the general public. That is why different standards, more robust standards are very much required over here. Now when I talk about scope and development of ISS, there is scope, there is development. When I talk about the scope part, so all standards relevant to the audit process for an assignment must be followed. That is, even if you have not followed even one standard, you cannot say that you have conducted your audit in accordance with ISS. For example, if there are say 40 ISS and you have followed 39 of them and not one of them, then you cannot say that you have followed ISS, you have conducted your audit in accordance with ISS, because what you have done is you have conducted your audit in accordance with not ISS, but some ISS are being left. ISS requires auditors to use their professional judgment when applying them. That is, it is not a bookish language that once you read it, you have to apply everything by the book. You should use your professional judgment also, where which type of judgment needs to be taken. For example, if auditors or if the audit standard says that you have to take appropriate number of samples, here what is appropriate samples, that is dependent on the professional judgment of the auditor. In exceptional circumstances, that is, it is not at all allowed to deviate from these standards, but in exceptional circumstances, if auditor reports or departs from the judgment from the standards, the departure must be justified in the working papers. That is departure possible? Yes, but it must be justified in the working papers why you have done so. Okay, other than that, if you have done without justification and if you have deviated, you will be said that you have not followed the standards on auditing. Now an auditor can only state compliance with the ISS when all standards relevant to the specific circumstances of the audit have been complied with. Now development, how the standards are developed. Is it important? Yes, please remember it. Okay, now project proposed. Okay, then if approved, project assigned to a task force, there is a separate committee that is created, they carry out the research, then they place the draft on IFAC website for comments, then comments are received and considered, draft is revised if required and reissued, and then finally revised ED as an exposure draft is issued as a standard. Now eligibility to become an auditor, who can become an auditor? Should be appropriately qualified. When I talk about appropriate qualification, can I become, can you become, can anybody become? So there should be a member of recognized professional body or holding an appropriate international qualification. What is this recognized professional body? So examples are ACCA, ICAI, right? These are the examples of recognized professional bodies and holding an appropriate international qualification. Like ACCA is an approved international qualification. In most jurisdictions, independence is also required. That is, if you want to become an auditor, you should be independent. What does this mean? That is, you should have independence in vision as well as in mind also. For example, if I talk about that I have some business, can I become the auditor? I am the practicing one, I have taken the approval, I am running one business or my family is running one business, can I become the auditor? No, because I might not be independent in that. I have to be independent in mind as well as independent in appearance also. Now what is recognized supervisory bodies? So read generally beyond the AA syllabus. That is, it is beyond the AA syllabus about what are recognized supervisory bodies. It is covered in your AAA syllabus. Members of RSBs are recognized by statute as eligible to sign audit reports, and ACC is also RSB. That is, once you are a member of any professional bodies which is recognized supervisory body, in this case ACC is also there, ICI is also there, then you are eligible to sign audit reports. However, there are certain jurisdictions. For example, ACCs cannot sign the audit reports in India, CS cannot sign the audit reports in UK. So there are multiple adjustments that needs to be done over there. Now rights and duties of auditor. So when I talk about the rights here, so rights to have access to accounting records and supporting documents, access, okay, that is very important. Then to require information from management, to have unrestricted access to persons within the organization, then to receive notice of and attend and be heard at the general meeting. My dear friend, this is not board meeting, this is general meeting. There is one MCQ that every student attempts at least wrong once. Then when I talk about duties, so primary duty is to report to the company's shareholders, then to keep proper records of the audit procedures, the evidences obtained, the conclusions reached, to report on whether auditor has received all necessary info or not, Then to report on whether director's report is consistent with the information contained in FS, that is other information ISS 720. Okay, do you need to remember this? Please remember this, very important for your examination. Okay, now let's talk about appointment of auditors. How the auditors are appointed, what are various laws and regulations, what are various attributes that are taken care of here. Whatever queries you have, please feel free to write on the chat box. I would be happy to answer it. Okay, after the completion of every chapter we will be taking up certain queries also, don't worry. Yes, please write your questions in the chat box. I would be happy to answer it once we complete this topic. Okay, now appointment of auditors. So the shareholders are ultimately responsible for the appointment of the external auditor. But sir, we were confused that either directors appoint the auditor or audit committee appoints the auditor, but here you are saying the shareholders are ultimately responsible. Yes, my dear friends, because audit committee only recommends, right? Board only places the options in front of the shareholders, but shareholders are the ones who appoint the auditors in the general meeting. That is why it is very important. Okay, the shareholders, not BOD, not directors, and not audit committee. I hope this is clear to you. Right, the process may be delegated to directors, then approved by the shareholders. Delegated to directors also sometimes, but approval would be done by the shareholders only. Now, typically appointment is for 1 year up to AGM, up to next AGM. Reappointment is done at the AGM, every AGM. Remuneration is negotiated either by directors or audit committee. Why not shareholders? Because imagine 1000 shareholders are sitting and then one auditor is standing over there and the negotiation is getting done. That would not be appropriate. That is why negotiation is done either by directors or by audit committees. Audit appointment process is discussed in detail in chapter 5. Okay, so it is not part of our today's discussion. Now removal of auditors. Is it important, sir? Very important. Why? Because see, appointment is one thing, but removal is another very important thing. See, to bring something is important and very typical, but when it comes to removing something, that's even more difficult. Okay, so removal is very important. Should not be removed just on the whim of directors. That is, it could not happen, or it should not happen, that if directors feels that the auditor should be removed, then they are removed. No, there is a proper procedure, there is a proper reasoning that is required. Otherwise, whenever auditor will not agree with the judgment of the management, they will just remove them, right? So only shareholders can remove the auditor from office as they appoint the auditor. Whosoever appoints, they can have the power to remove. Resignation, can auditor resign themselves? It is not at all easy at that point also. At point of re-election, that is, they do not want to be re-elected, so simply does not stand for re-election. But if they want to resign during the engagement, that is when they were serving as the auditor and before issuing the last year's audit report, if they want to resign, then what? Then must give the client written notice, not even notice, written notice of his resignation, which is also sent to the appropriate authority and audit authorities, appropriate regulatory and audit authorities. In certain cases, they might be sent, this letter might be sent to the ACCA committee also. Okay, now the auditor must also consider his professional duty to, let's mark this star mark first. Now, the auditor must also consider his professional duty to complete the engagement and legal consequences of resignation. That is, if say, imagine the year is 31st March, okay, year end is this, auditor was there up to 31st May, and now auditor says that I do not want to be reappointed, I do not want to fulfill the work of this particular year also, then it would be said that, you know, auditor is not behaving in a professional matter and management might sue the auditor also, because their reporting structure would be disturbed for this year. Why an auditor might resign? Can an auditor might resign? Yes. Significant limitations placed on work, that is, management is not ready to provide them the documents, the information. Loss of trust might also be there. Management has lied to them a lot of times, and now the auditor is not able to trust. Regulatory requirements might also be there, that is, there is an investigation going on the auditor or the management, and now the laws and regulations does not allow the auditor to continue. Role of audit committee must also be evacuated or evaluated for resignation wherever required, which is discussed in detail in chapter number 3. Now, limitations on external audits. Limitations of external audit. Are there certain limitations? Yes, these are known as inherent limitations. Inherent limitations as in which are by default present in the audit engagement. So see, my dear friends, there are complex nature of accounting and auditing procedures, right? Audit is done on a sample basis only, right? there is no particular power that is given to the auditors to verify the authenticity of the documents. There are limited time, limited cost and benefit analysis also. So nature of financial reporting could be one, inherent limitation, nature of audit procedures is one, timeliness and cost versus benefit is one. How nature of financial reporting? Because of involvement of judgments, the complexity of financial reporting gets disturbed. Now the nature of audit procedures may not be provided with all information. Audit is not an investigation, so they are not able to verify the authenticity also. Test check is there. Most audit evidences are persuasive rather than conclusive. That is, we can only understand that this is possible, but we are not able to conclude only this has happened. Fraud may be more difficult to detect with audit procedure if concealed, that is effectively hidden. And timeliness and cost and versus benefit, as in there could be more and more timelines, guidelines and timeline restrictions that audit needs to be performed in a particular timeline only, and there could be difficulty in balancing cost and benefit also. Now status of ISS and national standard setters. So many standard setters are moving towards the adoption of ISS. Many standard setters are moving towards the adoption of ISS. That is, what is happening is a lot of national standard setters, they are considering what they are aligning their national standards along with ISS, so that their reporting structure, their auditing standard is at par at the international level. National standards may continue but align with the principles of ISS. A lot of times in India also you will see that a lot of standards of SAs, the Indian standards on auditing, what you will see is that it would be written revised over there. That revised is as per the ISS only generally. If you see the requirements of those ISS, those SS, and if you see the requirements of ISS, you will see that majority of the standards are now aligned with ISS. Why? Because national standard setters are also moving towards ISS only. Now ISA could be adopted with additional specific guidance added. That is, ISS could be adopted and there could be specific guidances that could be created by the national standard setters as well. Now ISA 220 revised in 2020. Quality management for an audit of financial statements. Here there is one thing. When I talk about quality management, so quality management we understand in the ISQM 1 also, not part of your syllabus, but ISQM 1 also and ISA 220 also. There quality management is for the firm. Here quality management is for the audit. That is one engagement. Okay. What you need to understand here is that the power is at heal me with quality. H stands for human resources, engagement resources. E stands for ethical requirements. A stands for acceptance and continuous procedure. S stands for leadership responsibilities. M stands for monitoring, and E stands for engagement performance. That is, there should be a continuous performance review as well. ISQM 1, which deals with quality management of firm level, is not examinable at AA level, but it is examinable at AAA level. That is for the firm. Same procedures but at the firm level. So quality must be managed at the engagement level to have reasonable assurance. To have what? To have reasonable assurance that the audit has been conducted in compliance with professional standards and legal and regulatory requirements, and the auditor's report is issued is appropriate in the circumstances. Then there is heal me, right? So H stands for human or engagement resources. H, okay, uses the resources assigned or made available to the engagement team appropriately. That is, whatever resources you have as a firm, whether you are using it appropriately or not, that is engagement resources. E stands for what? E stands for relevant ethical requirements. So E stands for ethical requirements, whether ethical requirements have been fulfilled or not. So determines whether members of the audit team have complied with relevant ethical requirements or not. Then stands A, acceptance and continuance. That is, whether the new client has been accepted appropriately or not, and if there is an existing client, then whether all the continuance procedure, that is whatever understanding is there between the management and the auditor, whether that is appropriate or not, if there is any update, whether it has any impact over the acceptance and continuance procedures or the ability of the auditor to continue as an auditor or not. Determines that appropriate procedures for the acceptance or continuance have been followed and the conclusion reached is appropriate and has been documented or not. Then after this there is leadership, heal, that is L, leadership, whether the leadership has the appropriate tone at the top or not, so takes overall responsibility for managing and achieving quality on the audit or not. Then M stands for monitoring, that is remaining alert to relevant information and responding appropriately. And finally the engagement performance, whether there is proper system of performance measurement or not, so takes responsibility for DSR. What is DSR? Direction, supervision, review, consultation and EQR. That is, whether there is a proper system of direction, supervision, review that is going on or not. Consultation, whether the consultation wherever required have been taken or not, and whether engagement quality reviewer has been appointed and whether they are working appropriately or not. Then there is a little more discussion on engagement resources and engagement performance, that is DSR only, direction, supervision, review only. Okay, you can read it from here. And once you read it, you will see that there is only discussion of engagement quality review that is pending. Once you complete the discussion of engagement quality review, this chapter would be completed as well. So let me do this. Let's read it once. Okay, we do not need to mention anything over here, but we can read it once. Okay, we can read it once. So let's just quickly read it. When I talk about engagement performance. So there is DSR, direction, supervision, review. Direction, the engagement partner provides direction to the engagement team by informing engagement team about what, about their responsibilities, the objectives of the work to be done, the nature of the business, the risk related issues, the problems that they might face, and the detailed approach. That is, the engagement partner directs the employees, the team members, about what are the possible risks, what procedures they need to perform, what is the composition of the team, how they need to bring up the issues, how they need to resolve it, what are the timelines, everything. Then I talk about, so it majorly is done through team briefing, audit programs, time budgets and all. Then when I talk about supervision, this is a mix of direction and review, because supervision is generally done by the managers, that whether appropriate directions that have been given by the partner are being followed at the ground level or not, whatever issues are there at the ground level, whether that is communicated to the partner level or not. So functions of personnel carrying out supervisory responsibilities includes to monitor progress, to consider whether assistants have the necessary skills and competence or not, assistants understand the audit directions or not, to become informed of and address significant accounting and auditing questions, to resolve if possible any differences in professional judgment between personnel, and to identify matters for consultation, that is whether external consultations might be required. Then I talk about review. Now review is generally done by the top level management after various reviews at various levels. Generally the major review is done by the top level management right before signing the audit report, right? So most experienced team members review the work performed by a normal team member, a junior team member. Reviewers consider that whether work has been planned appropriately or not, whether work has been done appropriately or not, whether relevant evidences have been considered or not, whether the conclusion reached is supported by the relevant evidences or not, whether the work performed are adequately documented or not, and whether the conclusion reached is at par with the evidences obtained or not. So work has been performed in accordance with professional standards, work has been performed following the audit program, there is a need to revise the nature or not, work performed and results obtained are adequately documented, all significant audit matters have been resolved, objectives of audit procedures have been achieved, and audit evidence is sufficient and appropriate to support the audit opinion. Conclusion expressed are consistent with the results of the work performed and supports audit opinion. My dear friends, do you need to remember this word by word? Definitely not. Do you need to remember the definition of assurance engagement word by word? Definitely yes. But see, whenever there is a discussion of what needs to be done, you can write it in your own words. But if there is a definition that is given, definition means what? It has been given by some statutes, some laws, then you need to remember it word by word only. The following must be reviewed on a timely basis. Timely basis as in as per the relevance of the case, as per the relevant of the case. Now, overall audit plan and audit program that needs to be revised and reviewed appropriately. Financial statements, proposed audit adjustments, assessments of inherent and control risk, documentation of audit evidences, all of that. You will understand it more when we move to the further chapters. Now let's talk about the last heading for this chapter, which is engagement quality review. Now my dear friends, when I talk about engagement quality review, what you need to understand here is that engagement quality review is a very different concept. You will learn more about it in your AAA syllabus when we discuss about ISQM2, which is on engagement quality review only. But here there is a brief of engagement quality review that is performed. So engagement quality review, that is objective evaluation, unbiased evaluation of what significant judgments made by the engagement team and the conclusion reached thereon. Can this be performed by the team member only? No. It should be performed by a person who has the relevant experience to review the work of these personnel. So performed by the engagement quality reviewer and completed on or before the date of the engagement report. That is, before issuing the engagement report, this engagement quality review is done just to check whether the performance of the work that is done, whether that is appropriate, whether significant risk has been dealt appropriately, whether the conclusion reached is appropriate based on the scenarios or not. Okay. Now, who can be an engagement quality reviewer? A partner other than individual in the firm. That is, that person, a partner, other individual in the firm, or an external individual. That is, it could be a partner of the firm, it could be other individual of the firm, it could be external individual of the firm. So for example, in one of my firms, what I have seen is that there was one partner who was signing the audit report. Since it was a low risk assignment and EQR was applicable, so there was another partner of the firm who was senior to this partner. They were appointed as the engagement quality reviewer, or an external individual appointed by the firm to perform the engagement quality review. What they did, they just checked whether the overall procedure performed were appropriate or not, whether there are all quality checks appropriate or not, whether the communication is appropriate or not, whether the evidence is performed or evidences obtained, audit procedure performed, a conclusion reached is supported by relevant evidences or not. EQ reviews, that is engagement quality reviews, are required for audits of financial statements of listed companies and unlisted companies when deemed necessary by the firm. The engagement partner is required to. So it is mandatory for listed companies? Yes. Can it be performed for unlisted entities also? Yes. The engagement partner is required to do what? Determine that an EQ reviewer has been appointed, cooperate with the EQ reviewer, discuss significant matters arising during the audit with the EQ reviewer, and not issue the auditor's report until the completion of the EQ review. What if the auditor has, or audit partner has issued the report before completion of the EQ review? That report will not be considered as a valid report. Now, monitoring quality. What is monitoring quality? So here there are two types of reviews that might happen: pre-issuance review, post-issuance review. Pre-issuance review is called as hot review, the one that we have just discussed. And then there is one post-issuance review also, that is called as cold review. This is done majorly in the form of peer reviews or in the form of internal quality checks. So pre-issuance review, hot review, conducted before auditor's report is signed and issued, aims to ensure that audit file supports audit opinion, usually applied to high-risk audits. Whereas when I talk about post-issuance review, that is called as cold review, that is conducted after the audit report is issued. Recommendations must be followed up to ensure that there is proper quality is maintained, and time consuming is also there because that is detailed level. Now, compliance with ethical requirements. Every point should be understood very correctly over here. You do not need to remember anything, but you need to understand every line. Engagement partner should remain alert for evidence of non-compliances. That is, whenever they understand that there could be an evidence of non-compliances, they should immediately highlight it to the relevant people, and they should take the necessary actions also. Engagement partner should identify any threats to independence, that we are going to discuss in chapter number 4, where we will be discussing about the professional ethics as well as the threats also, and take appropriate action to eliminate such threats by applying safeguards. What are safeguards? We will be discussing in chapter number 4, and withdrawing from the engagement if appropriate, or take legal advice also. With this, we have completed chapter number 2 also. Just in case if you have any queries now, please feel free to let me know. I would be happy to answer all your queries. Yes, please ask your queries. Please let me know your queries. Now I can read your chats. Please let me know your queries. Please let me know your queries. Yes. Please let me know your queries. Yes. Somebody wrote that they have one question. Please feel free to ask. Don't worry, please feel free to ask your question. Yes. Somebody wrote that they have one question. Please feel free to ask. Yes, please feel free to ask your question. Then we will take a short break of 5 minutes, and then we will be going for chapter number 3. Yes, tell me. Any questions? Any question? Yes, my dear friends, any question? Okay, no question, don't worry. So let's take a quick 5 minutes break, and then we will be moving further with chapter number 3, which is corporate governance. Okay, so let's take a quick 5 minutes break, then we will be moving further with chapter number 3, which is corporate governance. Okay, my dear friends. So let's just start with chapter number 3 now, which is corporate governance. My dear friends, when I talk about chapter number 3, corporate governance, this is one of the most important chapters of your AA syllabus. Now, there are certain key terms which needs to be understood very, very carefully. One is corporate governance, another one is those charged with governance, then there is management, right? So when I talk about corporate governance, this is a system, not a procedure, not a structure, not a policy, a system by which business corporations are directed and controlled. This is taken from your 12th commerce business studies syllabus only. There were 5 chapters, right? 5 stages. So out of that, last 2 stages, which is direction and control, is taken over here. So the system by which an entity is directed and controlled is called as a system of corporate governance. This majorly talks about the executive positions, the non-executive position. This talks about the committees that are created. Now when I talk about those charged with governance, what is more important here is that these are the people with ultimate power and responsibility for the company. They are vested with the responsibility of setting the strategic direction of the company. So individual with responsibility for overseeing the strategic direction, that is at what direction the company is going, setting of that direction, that is being vested upon into these people of the entity, and obligations related to the accountability of the entity, that is they are accountable for the entity, they are answerable for the entity, including overseeing the financial reporting process. My dear friends, if anything goes wrong with the financial reporting process, will you blame the employees, will you blame the management, will you blame the directors, or you can blame the those type of governance also, because they are people with ultimate power and responsibility. Now management, who are management? These are people at one level below the Doshave governance. Sometimes management is equivalent to Doshave governance only. These people are same also. For example, if I talk about my organization, we are 2 founders maybe, and there is one team, then it could be called as a Doshave governance as well as management. But if we 2 founders feel that now we have to hire a team and we will not be involved into the daily management, we will just act as promoters. So now we will be called as Doshave governance, but a team would be called as the management. So individuals with executive responsibility, that is day-to-day responsibility for the conduct of the entity's operation, is called as management. Now objective, relevance and importance. So when I talk about the objectives of corporate governance, so ethical and moral behavior of corporate management, that is the entity should be managed in an ethical manner, in a moral manner. Integrity, transparency and accountability in business activity, that needs to be ensured. Do we need to remember this word by word? No. Compliance with laws and regulations, securing reputation and confidence in attracting inward investment. Okay, now when I talk about relevance, so generally all corporate governance regulations are aimed at listed companies only, where there's separation of ownership and management, that is it is more relevant for those companies where separation of ownership and management is there. That is the people who are managing, they might not be the owners, the people who own the company, they might not be into the managing committee of the company. There it is more relevant. Then I talk about importance. So research shows that entities that take on corporate governance practices seriously are more prosperous, crucial to a company's ability to generate sustainable growth, and risk that weak corporate governance will lead to financial losses for entities and shareholders as well. Now OECD, what is this OECD? So the full form is Organization for Economic Cooperation and Development. Can this be asked in an MCQ? Yes. Organization for Economic Cooperation and Development, there are certain member countries to it. Promote policies designed to improve the economic and social well-being of people around the world. Economic and social well-being, they try to do what? They try to improve, not set standards. Improve, not set standards. Okay, then economic and social well-being of what? Of people around the world, not organizations. Okay, this is very, very important to note. These are the common mistakes that everybody makes. Now OECD principles take account of global evolutions in corporate governance and capital markets, and reflect shift in stakeholder expectation, including recommendations on sustainability. That is they majorly work on sustainability, increasing the sustainability of the organization. That is an organization should be more and more sustainable. OECD principles guides an organization towards more and more sustainability. Principles focus on publicly traded companies but can be used as a best practice in all companies. That is focus is on publicly traded companies but can be used on voluntary basis on other companies as well. Principles aims, principles of OECD, as in principles means principles of OECD aims to provide a robust but flexible reference for policymakers and market participants to develop their own frameworks for corporate governance. That is OECD is applicable on listed, first point to be noted. Then OECD provides principles, not rules. That is they are more and more flexible, and people could use it to the best of their practices, and what they can do is they can mold it also according to their organizational needs. Now, OECD principles. Number one is ensuring the basis for an effective corporate governance framework, the rights and equitable treatment of shareholders and key ownership functions, institutional investors, stock market, and other intermediaries. Then disclosure and transparency is there, the responsibilities of the board is there, sustainability and resilience is there. Out of these, we have to understand one important pointers of all of them. So when I talk about ensuring the basis for an effective corporate governance framework, OECD principles, do you need to remember, mug up the OECD principles? No. Do you need to remember that what OECD principle says? Yes, in your own words, not in these exact words, but should you be able to explain if there is one point and they ask for the explanation on what OECD talks about this, then you have to explain it. Okay, so ensuring the basis for an effective corporate governance framework, that is OECD principles are more aligned towards making corporate governance practices more and more sustainable. So CG framework, CG as in corporate governance framework, should promote transparent and fair markets and efficient allocation of resources, be consistent with the rule of law, and support effective supervision and enforcement. Very basic points. The rights and equitable treatment of shareholders and key ownership function. So corporate governance framework should protect and facilitate the exercise of shareholders' rights and ensure equitable treatment. That is, protect and facilitate the exercise of shareholders' rights. OECD principles are created in such a way that people who are considered as shareholders, they are able to actually enjoy their rights, actually able to exercise their rights. Institutional investors, so CG framework should provide for stock markets to function properly. That is, whatever their principles are, they should make stock marketplace a better place to trade. Now, disclosure and transparency. So CG framework should ensure timely and accurate disclosures of all material matters. That is, whatever information is important for the stakeholders to know, that should be judged, that should be disclosed at the appropriate timing so that they could take the decision in their favor. Now, the responsibilities of the board. So CG framework, these are things said by OECD principles about the CG framework. That is, OECD principles tells some frameworks, tells some guidelines, give some guidelines to CG frameworks on how it should behave. So CG framework should ensure the strategic guidance of the company and effective monitoring of management by the board. Sustainability and resilience. Do you need to mug this up? Definitely not. Sustainability and resilience. So CG framework should provide incentives to companies and their investors to make decisions and manage risk in a way that contributes to the sustainability and resilience of the corporation. My dear friends, as this question has never been asked that now mention all the OECD principles. No. This question has never been asked that what OECD talks about the CG framework. No. But that question has already been asked where it talks about that these are the CG frameworks, highlight the deficiencies here and how OECD principles could guide. So you should remember these words in a manner that you should be able to apply it, not remember and mug up in the exact words. Now, the provisions that are most important for auditors include, now this is important for you. Basic shareholder rights should include the right to obtain relevant information and elect, appoint or approve the external auditor. That should be there, right? That shareholders should be given the right to elect and appoint the auditor. An annual external audit should be conducted by an independent, competent and qualified auditor as per international standards. So this is important for you, right, to remember. Now, external auditor should be accountable to the shareholders and should exercise due professional care. This we will be discussing more under the professional ethics chapter also. Now, UK code main principles. So there is one UK code, United Kingdom code. Okay, main principles are there. These main principles majorly talk about the important factors that should be taken care of framing the corporate governance principles. So UK corporate governance code is set by FRC. What is FRC? Financial Reporting Council. It applies only to listed companies, okay, on the London Stock Exchange, but can be used by any entity as the basis for best practice. It takes comply or explain approach. That is, either you comply with all the requirements, and if you are not complying with any of the requirements, then what you need to do is you need to explain that why you have not complied with it. Now, it talks about 5 important parameters. Once we complete these 5 important parameters, see, board leadership is there, division of responsibility is there, composition succession is there, then audit, risk and internal control is there, then remuneration is there, then we talk about corporate governance deficiencies, then we talk about audit committees, and once we complete about audit committees, then there would be benefits and limitations, and with this we can say that internal control would come, and finally the chapter would be completed. So majorly we talk about these 5 things are there, plus audit committee plus internal control, little discussion on internal control. So that is how the chapter is divided. Okay, now let's talk about it. Board leadership and company purpose. What is this? These are the UK code main principles. The board should about board leadership and company purpose. What is written, we need to read line by line, we need to understand it carefully. The board should ensure that the necessary resources are available to meet the company's objectives and measure performance against them. So necessary resources are available. Okay. Now establish the company's purpose, values and strategy. So establish what company's purpose, values and strategy. The company should not move beyond or ahead without having clear goals, roles, responsibilities, values. Okay. Then the board should ensure effective engagement with and encourage participation from shareholders and stakeholders. That is, the board should be in continuous touch with the stakeholders, understand their requirements and provide the relevant reporting to them also. Ensure effective engagement and encourage participation from shareholders and stakeholders. Ensure that workforce policies and practices are consistent with the company's values also, and support its long-term success. The workforce should be able to raise any matters of concern. That is why you will be seeing that a lot of companies have grievances cells. Why? Because the corporate governance mechanism talks about having a grievance cell where the employees or the stakeholders could report their grievances, and there should be a separate department to resolve that also. That is why once you see any of the annual report, you will find that every company has a stakeholder relationship committee also. Now division of responsibility. So the chair as in the chairman or the chairwoman leads the board. That is the board is headed by a chairperson or a chairman and women, is responsible for its overall effectiveness in directing the company, should demonstrate objective judgment, that is they should be unbiased in their approach, should promote a culture of openness and debate. Do you need to remember this word by word? Definitely not. Facilitates constructive board relations and the effective contribution of all entities. Constructive board relations and effective contribution of all entities. Entities as in what? Non-executive directors. Non-executive directors. That is very, very important. Non-executive directors. Now, ensure that the board receives accurate, timely and clear information also. Now the chair should be independent on appointment. Chair should be independent on appointment as in they should not be interested, they should not be biased in their approach. Not an employee for last 5 years, no material business relationship for at least last 3 years, not a significant shareholder. That is, some shareholding is allowed, but they should not be a significant shareholder. Do you need to remember this? Please remember this. For MCQs, please remember this. Okay. Now there should be a clear division of responsibilities between the chair and the executive leadership of the company's business. That is, the chairman of the board and the executive leadership, that is the people who are involved into the day-to-day management, should be clearly distinguished so that they can be objective in their approach. Now composition, succession and evaluation. Composition, succession and evaluation. So a majority of members of nomination committee should be NEDs. A majority of members of nomination committee should be NEDs. That is, for example, if there are say 5 members, at least 3 should be NEDs. Okay. Now all directors should be subject to annual re-election. That is, there should not be any director who is appointed for n number of years. Every director should be re-elected every year. That is, there should be a system of rotation. The chair should not remain in the post for more than 9 years. That is, after 9 years, the chairperson, the chairman or women should also change. Okay. Now appointment and succession plans. Appointments and succession plans should be based on merit and objective criteria and promote diversity, inclusion and equal opportunity. That is, whenever we talk about any of the listed entities, every year there is a system of appointment which is driven by NRC, which is Nomination and Remuneration Committee. It does not happen that the son of the chairman would become the chairman only, or son of the managing director will become the managing director only. It is driven by the merit also. That is why you will see that all of these people are highly qualified also. Now an annual evaluation of the board should consider its performance, composition, diversity and how effectively members work together to achieve objectives. That is, it is not run as a family business. The decisions are not taken by one person. The decision is taken in the overall common best interest of the company as well as its stakeholders. Now audit, risk and internal control. The board should establish formal and transparent policies. The board should do what? The board should establish formal and transparent policies and procedures to ensure the independence and effectiveness of internal and external audit functions. That is, the board should take more and more actions towards making the internal and external audit personal audit functions more and more independent so that they can report without any bias. Satisfy itself on the integrity of financial narrative statements. Present a fair, balanced and understandable assessment of the company's position. This line should be important. Then establish and maintain an effective risk management and internal control framework. Determine the nature and extent of the principal risk the company is willing to take in order to achieve its long-term strategic objectives. That is, risk management department comes under this, risk management committee comes under this. Then remuneration. So this is driven by nomination, remuneration only. See, if I talk about the first one, board leadership and company purpose, this is the leadership part. Then division of responsibility, how it is divided into multiple committees. Then first committee comes as the NRC committee, composition, succession, evaluation. Then audit, risk management committee. Then third one is NRC only. Remuneration policy should be designed to support strategy and promote long-term success through a remuneration committee. NRC is the nomination remuneration. No director should be involved in deciding their own remuneration outcome. That is, whenever there is a discussion going on for say Mr. A, who is the director, Mr. A should not be part of that particular meeting. Now let's talk about corporate governance deficiencies. Again, read line by line. Responsibility for good corporate governance lies with TCWG. But sir, if you had to read line by line only, then why have you prepared these notes? Because these are taken from a bunch of collection wherever I have considered that these lines are very, very important for you to remember, and these are frequently asked in the examinations also. That is why I have handwritten these notes for the purpose that I should take up the relevant pointers and explain it to you line by line, so that you remember everything and you do not need to mug up bigger paragraphs. Now, responsibility for good corporate governance lies with TCWG, usually the board of directors. So who is responsible for maintaining good corporate governance? TCWG or board of directors also. The risk of corporate failure should be reduced with increased compliances with the applicable governance codes. That is, as and when people starts complying more with these codes, with these regulations, there should be lesser corporate frauds, lesser corporate irregularities that might be noticed. Auditors also need to be aware of their critical role in corporate governance, because they are not merely acting as auditors, they are evaluating, or they are acting as the torch bearers of a good corporate mechanism system as well. Now, how it can be tested? Question might present a scenario on the state of a company's governance. That is, they might give a case study that this company, this is the status, this is the nomination remuneration committee, this is what is done by risk management committee. The company is not willing to take up any risk management, or the company is not willing to create a remuneration committee. What could be the issues? Candidates should be able to identify corporate governance deficiencies and make appropriate recommendations also based on whatever we have studied. That is why I told you, you do not need to remember anything. You need to understand that what is the requirement, and you should be able to frame it in your own words. Now comes the most important discussion of this entire chapter, which is audit committee. When I talk about audit committee, what is more important to understand over here is that audit committee is that committee where you need to understand that this is always and always asked in the examination, and that is something that makes this chapter or this topic very, very important. I hope this is clear. Any questions so far? Then we will be discussing about audit committee and internal control, and we'll be done with the chapter as well. Any questions, please feel free to let me know. I can read your chats now. Yes. Any questions? I can read your chats now. Yes. Any questions? You can say at least yes if you are understanding everything. You can say no questions, that's fine. You can say no questions. You can say yes, we are understanding everything. Please write something. Yes. I would request you to please write something at least to say that yes, you are attending the session. I can see that there are so many people in the session. Tell me. Okay, perfect. Thank you so much. Now let's go to the discussion of audit committee. When I talk about audit committee, please read it line by line. Please try to remember it as far as possible. Okay, this is one topic where I will say that you have to remember it word by word as well. So it is mandatory for a listed company. Can other companies appoint or have audit committee? Yes, but it is mandatory for a listed company. Okay, then every point is important. Best practice for unlisted and other entities also. Through the audit committee, external auditors are responsible and report to the shareholders, not the executive management. That is, this audit committee is majorly formed of independent directors. Okay, and that is why whenever the auditor is responding or reporting to this audit committee, they are indirectly reporting to the shareholders, the stakeholders only, and not the executive management, the overall management of the company. The audit committee enhances the external auditors' independence and provides greater independence for the internal auditors as well. That is, since external auditors are dealing with people who are independent of the organization, these people are independent auditors, these people are independent management, so they are able to better analyze and report on the financial statements. Composition, very important, very important. You have to remember word by word. Okay, at least 3 independent non-executive directors, 2 for a small company. That is, if it is a normal company, at least 3 independent directors. And when I talk about a small company, at least 2 independent directors, but these independent directors should be non-executive directors. At least one member must have recent and relevant financial experience. Now see, in your case studies, you might feel that they might be asking that this person has this much experience and they have worked recently here and they are joining as the member of the audit committee. Is it appropriate? So you have to evaluate it whether the experience that they have can be considered as recent and relevant financial experience. If they were CFO of some company, finance director of some company, it is a recent and relevant financial experience. Whereas if they were part of the production head, they were working as the production head and now they are joining the audit committee, they do not have the recent and relevant financial experience. As a whole, the committee must have competence. It also talks about the sector in which they have the experience. As a whole, the committee must have competence relevant to the sector in which the company operates. As a whole, the committee must have competence relevant to the sector in which the company operates. That is, even if all the members do not have the relevant sector wise knowledge, but as a whole they should have the knowledge of the particular sector in which they are operating as well. That is also very, very important. Now, main roles and responsibilities, do you need to remember this? Yes, of course. There could be a separate question on this. Okay, so this becomes one of the most important part of your chapter. Now, monitoring the integrity of FS. If I have to talk about one particular heading which is most important that we have studied today, it's this only. Monitoring the integrity of FS. Main roles and responsibilities: monitoring the integrity of FS of the company and related formal announcement, provide advice where requested by the board on whether annual report and accounts taken as a whole is fair, reviewing the company's risk management and internal control framework and evaluate if there is any correction that is required unless separate risk management committee is there. Monitoring and reviewing the effectiveness of the company's internal audit function, monitoring and reviewing effectiveness of the company's internal audit function, reporting to the board on how it has discharged its responsibility. It means the committee. Okay, now if you have to remember the keywords over here, so remember integrity or integrity of FS, advice, risk management, effectiveness of internal audit function, internal control function, and reporting to the board on how it has discharged its responsibilities. If you remember these words, you will be able to write everything. Now, key points from FRC guidance on audit committees, that is Financial Reporting Council has also created certain guidelines on audit committees. So these are the key pointers from that. The company should provide an induction program for new audit committee members so that they understand that what has been the reporting requirements, what is the level of understanding of the previous members, what is the overall nature of effectiveness of the previous members, and they should continue it. The committee should at least annually meet the external and internal auditors also to understand that what is the level of the external auditors understanding, what was the problem that was faced in the earlier periods, and it should be resolved in the upcoming periods. The audit committee should be provided with sufficient resources to undertake its duties. That is, they should be provided appropriate resources to understand the frameworks and to report on the guidelines, and they should be provided appropriate resources to perform their functions. The committee is responsible for overseeing the company's relation with the external auditor by continuously meeting with them, by continuously addressing their issues as well. Now, this is very important. The board has ultimate responsibility for an organization's risk management and internal control systems, but the board may delegate to the audit committee some functions to assist the board in meeting this responsibility. That is, ultimately the board is responsible, but board could delegate these responsibilities to the committee. See, these committees are nothing. Imagine this, that this is a table. Okay, the chairman is sitting over here, people are sitting over here. Okay, 3 people here, 3 people here, 3 people here, so in total 12 plus 1. Okay, these could be called as audit committee members. These could be called as audit committee members. These could be called as risk management committee members. Okay, don't think that 3 is there, I am just taking example. This could be called as stakeholder relationship committee members. Stakeholder relationship committee members. They could be called as what? Nomination and remuneration committee. Nomination and remuneration committee members. Okay, now the audit committee should have primary responsibility for the appointment of the auditor. The audit committee should have primary responsibility for the appointment of the auditor. Or audit committee appoints? No. Audit committee recommends to the board, then board presents it in front of the shareholders, then shareholders appoints. The audit committee should approve the terms of engagement and the remuneration to be paid to the external auditors. That is true, but approve, not finalize, not decide. Okay, then the committee should assess the independence and objectivity of the external auditor annually, whether they are still independent, whether they are still objective or not. At the start of each annual audit cycle, the audit committee should ensure that appropriate plans are in place for the audit. That is, they should sit with the auditors and understand whether they have the appropriate plans for the audit or not. Okay, now let's talk about this. Key points from audit committees and the external audit. See, once we started the discussion of audit committee, we just discussed about the basics of it, then we discussed about the FRC guidelines, then now we are discussing about key points from audit committees and external audit minimum standard. UK minimum standard is there. So the standard is applicable to the largest UK listed companies. Other companies may wish to apply its provisions. Managing non-audit relationship with the audit firms is very important for the audit committee, that is non-audit services. When we talk about non-assurance services that we will be discussing in our further chapters, we have to understand that whether non-audit services could be provided by the audit firms or not. If yes, what is the extent of it, that should be kept in consideration by the audit committee. Conducting the tender process and making recommendations to the board that every 10 years the tender is done and every 20 years the rotation is done. Review and monitoring the content of the external auditors management letter, that is whatever management letter is taken by the external auditors, whether that is appropriate for the auditor or not. Benefits and limitations. Benefits is there, limitations is there of the audit committee. Okay, benefits means what? More effectiveness, more understanding. Limitations could be that there is more cost, there is a longer process now. Benefits: provide effective and informed oversight in helping to ensure market, public and stakeholder confidence. Then enable the board to delegate a thorough and detailed review of audit matters, because board might not understand the financial matters, but these audit committee members have the recent and relevant financial experience, as well as they have the sector experience as a whole also. Now enable non-executive directors to contribute independent judgment on issues of critical importance in running the business, because if dependent people would be there, they might be thinking about their share prices, they might be thinking about their wealth, but these are independent, so they will be providing the right judgment. Offer the external and internal auditors a direct formal link with non-executive directors. That is very important, because once the auditors are comfortable that they are reporting to non-executive directors who have the interest of the shareholders, of the stakeholders in their mind, they will be more comfortable, they will be more willing to discuss about all the issues. Limitations. So this is important. Yes, benefits and limitations could be asked. Important. Okay, now limitations may be considered as an unnecessary legal or regulatory burden. The required time and expertise of entities makes finding suitable candidates harder. For example, if they require someone from say chemical industry experience, now it is not important that in India or in the relevant jurisdiction, it is important that some person who has that relevant expertise might be willing to change or might be willing to join your company, so appointment would be very difficult. Members may feel that the responsibilities and risks are too high than the reward, that is the audit committee members may feel that we have been given a lot of responsibilities but we do not have the authority, or the benefits are not matching. Issues with the balance of cost benefit also, because these people might come at a large cost, at a very high cost, and the benefit might not match. Only effective where they can operate as the governance codes intend, that is if they are given these many powers as we have studied about it, then it's good. But what if they are not being given these powers by the owner, by the relevant management, they are not being given the formal chain power, responsibility, authority, then it becomes an issue. Internal control and risk management. Internal control and risk management. Okay, internal control and risk management. The board has ultimate responsibility for risk management and internal control. That is important, including determining the nature and extent of the principal risk and it is willing to take to achieve its strategic objectives, that is risk appetite. So the board talks about the risk appetite. Now ensuring that an appropriate culture has been embedded throughout the organization, responsibility of the board. Appropriate culture. Agreeing on how the principal risk should be managed or mitigated to reduce the likelihood of their incidence or impact. Now effective controls are an essential element of RMIC systems and can cover many aspects of a business, including strategic, financial, operational and compliances. The board should agree on how the principal risk will be managed or mitigated and which controls will be implemented. A RMIC system, what is this? Risk management and internal control system, will include risk assessment, that is giving responsibility for the risk and evaluating the impact of the risk. Information and communication systems, how the information is communicated internally, externally, and only the relevant information should be communicated. Management or mitigation of risk, including the use of control processes, that is how the risk would be reduced by application of controls, and processes for which monitoring and reviewing their continuous effectiveness, that is whether the processes that are put in place, whether they will be working effectively continuously or not. With this we have completed chapter number 3 also. So my dear friends, if I go to the index right now, okay, now you can ask all of your queries, but if I go to the index right now, see, these are my notes only. I hope you have liked these notes. I hope you are liking these notes, right? These are my handwritten notes only. Now chapter number 1 is done, chapter number 2 is done, chapter number 3 is done. So now we have completed these chapters. Now when we will come next, we will try to complete from chapter number 4, 5, 6 and chapter number 7 also. That's how we are going to move forward in a next session. I hope you have understood everything. Now if you have any queries, I would be happy to answer it. I can read your chats now. Yes, please let me know if you have any queries. Yes, if you have any queries, please feel free to ask. I'm here, I'm understanding, I'm listening, I'm reading all your queries. Please tell me. I hope you like the session. If you like the session, please hit the like button. Please comment how did you find the session, and if you have any queries, please feel free to comment. Even if not in the live mode, even if you are seeing in the recorded mode, please feel free to comment down your queries. I would be happy to answer it, be it in the comment section or in the Telegram or in the next session. Don't worry about it. We are going to schedule 9 more sessions where we are going to cover the entire syllabus along with revisions, along with question solving, along with 1 or 2 test questions as well. So don't worry about it. Now my dear friends, I would strongly suggest you to please subscribe to this channel. Please like this video. Please share this video among your ACCA groups as well as ACCA student groups. And now I would strongly suggest you to subscribe to our Telegram channel as well, because there we will be posting about all the relevant content regarding this. Yes, the next session is placed day after tomorrow. How did you find the session? Please let me know in the chat box. How did you find today's session? Please let me know in the chat box. Yes, how did you find today's session? Do let me know in the chat box. Yes, the next session is scheduled day after tomorrow. However, I would be placing all the updates. I will be posting all the updates on my Telegram channel, so stay tuned for that. Yes, how did you find today's session? Great. Thank you, thank you, thank you, thank you. I hope you have understood these 3 chapters. Now I would strongly suggest you to please revise these 3 chapters from your end also. If you need the notes, if you feel that these notes were helpful, please comment for the notes. I would be happy to share it with you as well. I would be happy to direct how you can get these notes as well. Okay, so thank you so much. Now see you in the next session. Thank you so much.